I don't want to be specific with this highlight today. I want to be a little general and then get down to a specific. And that is, boom, you look at a chart, any chart. If you're unfamiliar with any chart, even if it doesn't have much on it, you're going to be like, well, what's this and what does that mean? And your own perspective or interpretation of what you're looking at. Everyone's going to default to some lived experience that they have. All right. Not getting philosophical, but any history, any experience that you have in trading, you're going to default to that, whether you should or shouldn't. That's just natural. So you look at these charts, you're like, wow, a lot of stuff on it. And you'd be right, but there isn't that much stuff. It's a duplication of different time frames. So I could immediately remove 70% of this if we just had one time frame, for instance, this bar right here that we call OPP, other people's positions. We could eliminate, if we just had one time frame on this, we could eliminate over 60, 70, 80% of what's on it. But the point is that features that happen with anything kind of add to the ability to get better at something. And so when you're teaching anything, baseball, you don't teach everything that you need to know about baseball in the first practice. You build on it. You have to start with one simple premise and then add things. And now you understand everything because you understood one thing at a time. I'll say it again. You'll understand all of it if you understood it one thing at a time. When you try to understand 10 things at once, you've skipped over so many dominoes that they weren't able to fall in the proper progression. And you cannot go to chapter 10 in algebra if you skipped chapter 2 and 3 and 4. Chapter 10 is going to be a little hard. You have to build on anything that you try to take from learning to understanding. And there is a huge difference between learning something and understanding something. And most people don't understand that. And they just want to learn, memorize, but not click. Things have to click. So anytime I might do a podcast or something where most of the people listening to me, watching me are unfamiliar with me, I try at some point to say, and it might be some of these YouTube viewers in this particular video, don't take my word for it. First, does something click? Does something make some sort of logical sense to you that really can't be disputed with something I say or something someone else says? But also, you have to be able to see it for yourself. So let's talk about PWAPs and lines in the sand or support resistance. All means the same thing, but we get there in for different reasons. That's this green line and red dotted line that I just pointed to, right? So we could get into where they come from and everything else. All of that's really important from step one. How do you come up with your support and resistance? Why does it work when it works? Where the hell is this notion of good support work when it works? Why is it good support? Is there an example of people who use support resistance that are irrelevant? Don't matter. It's just simply a line on a chart. Could be arbitrary, and a fifth grader could put it there. Yes, most people do. All right. It has to click. It has to make sense to you. And what I'm going to say is something that I've said a lot in the past that it's worth repeating. And that is you have to, in order to read somebody else or something else like the market, you have to understand how you feel in the same situation. If you could, because you know what that feels like, how do you feel when you're nervous? How do you feel when you're anxious? How do you feel when you're long or short? How do you feel when you have a winner or a loser on? Because we're all human, so you could accurately assume that's how another person's feeling if they're human, or even a robot. How do you feel? And if there's a bunch of psychology in the market that makes up the market, that's how the market feels. All right. So there'll always be psychological emotion when money and being right or wrong is present and markets are. Even if AI were to take over, AI and algos and everything else is created by humans, there's a sense of emotion in our fingerprints all over that. And then there's always going to be emotion where someone will what's the word? They'll turn off a particular automated strategy and shut it off or screw it up or overdo it. So you could be watching an automated strategy, all right, that actually is a result of someone's emotion changing it, tweaking it, you know what I mean? So it might be automatic now, but it had all the input of the emotions involved in changing something that maybe shouldn't have been changed, right? Or doing things that still have emotion involved in it. Circling back to, if you don't understand what markets feel like, then you're not trying to understand it with how you feel like first. I know what it feels like when someone lost their shit and is out of control, swearing and yelling, because we've all kind of been there. Hopefully, not a lot. In order to handle someone who lost their shit, you have to understand where they're coming from. You don't have to agree with them, but you need to understand them. And the best way to do that is to know how you feel in that exact moment in the past when you've snapped or lost your shit. And now it might give you a better way to handle a situation like that. And I bring this up because most everything relates back to trading. Someone in this room now obviously are here for trading. People that watch my videos are obviously there on YouTube for some help in understanding trading. The fact that everything in life could be related to trading is pretty fascinating. It's what got me interested in this business when I was 13, 14 years old in the mid late 80s, was the fact that you could take anything in a conversation over dinner about something and relate it to stocks my dad owned, right? Or a relationship he had with people because of talking about stocks that he owned. Either way, so many things can be and are related back to this business that we're all here for. So it's important in conversation to always talk about repetition, if it's repetition on things that matter, understanding that the basics are not basic to most of the rest of the world, and understanding why most people skip over the basics, not just in trading, but in many things that they're trying to learn. Also, the point of this particular um, talk that I'm doing as part of this video is to give people a sense that it's important. It's important to know you do not understand anything going to step 10 first. You do not get and put in a better position at figuring this out and having it click for you if you skip over a couple important steps. And you might not realize you skipped over a few steps, because chances are you did, unbeknownst to you. You don't know what you don't know. So now you're trying to learn step 7 and you have no idea step 3 or 4 not only exist, but you never took the time to understand them. That's why it becomes tougher wherever you're at, because you skipped over certain steps or features, maybe because you didn't know they exist, or they became maybe too difficult to kind of absorb. You got to realize what that is. Repetition. So if you realize it's not an infinite amount of steps that you have to learn, so your journey doesn't start. If you look at the screen share, your journey doesn't have to start at a particular dot and then always continue to go on, and your journey is some destination that is just out there. You never reach a destination in this business, and probably anything that you're trying to acquire a skill for. There could be a starting point, but the destination could be this. If you just look at the screen share, your destination could be this: the back and forth, which creates and turns learning into understanding. The retracement of a market, a healthy, strong market doesn't go straight up, it retraces in a way that shows that it's only bringing along the stronger longs. If it doesn't retrace, chances are it just gets expensive and it's a short lived rally. You want it to grow and retrace and regrow and retrace and re rally. And that's repetition. So if you look at this line I drew down in here, there is no end point, and there is no um, you never return to the road that you were on. In fact, that's all you do. It's A to B to A to B to A to B to A to B. And then you could make things interesting in that back and forth journey. But don't think that interest is only things that there must be 3 or 4 paths that take you into this spider web or rabbit hole of confusion that mostly exists when someone embarks on a journey to learn anything. But when you talk about learning this business, boy, it's got competition, it's got performance, it's got emotion, it's got objectivity, it's got some intelligence, but also the ability to create an advantage over the most basic thing. There are millions and millions and millions, hundreds of millions of dollars are made for one reason, because you got information and you get information before most of the rest of the world. It's like, wow, you can make that much without much of a skill other than the skill of knowing something before other people, and that's one thing, because they're able to predict something because they got information before most of the rest of the people. And that's what we're in, man. We're in the predictive business. And there's certain things, tools, features, advantages that you get and that you have that give you a higher probability to make a better prediction. And then there's a lot of things that are simply irrelevant, that don't matter, that it's a waste of time, because not only are you going down a path that doesn't really help increase your probability of making a decision, but you didn't even realize that. So you're going down a path with a cliff at the end of it. It's even not only a waste of time, but it's dangerous on a path that has a cliff at the end of it. But if you could convince yourself that you're on the right path, then you beat the hell out of that path back and forth. Repetition isn't helpful. It's imperative. It's not important. It's imperative. You look at the highest level of a sport like basketball, they're not teaching these athletes new things. They're teaching them a new way to do and practice the same thing. The same thing. And trading is no different. The way to predict where price is going, the way to value the price of anything is to compare it to other things. It's to follow buyers and sellers, and it's to understand what information is going to change the price of that particular product. In this case, a product or instrument is a stock index, is a currency, is crude oil, it's gold, it's again anything that has a price attached to it. And there's money that could be made if you can, with higher probabilities, with an objective tool or tools, be able to know when something's cheap or expensive, because it's only those two times that you're going to get a good move lower or higher. If you're accurate that something is cheap, chances are the next move is going to be up. If you're accurate that something very expensive, chances are it's going to move down. Because if you know something's expensive, you're a lot less likely to buy it, aren't you? And so you're less inclined to buy something that you deem to be expensive. If you are accurate saying something is cheap and you need it, not only do you know it's cheap or think it's cheap, but you need it, you're going to buy it. If something is expensive and you don't really need it, you're not going to buy it. But if you can sell it, and in trading, especially in futures, you could sell something you don't have called getting short, you're more inclined to do that. You're more anxious to do that. Man, it gets down into the psyche of buyers and sellers. And I don't give a shit about AI and automation, because essentially AI has been around for a while. Emotion's still going to be present. In fact, it might be easier to read the emotions of a market with more and more AI. Because what's AI? It's essentially the intelligence of us, only in milliseconds. And so that same emotion, that same competition, it's not just one master AI that's going to be doing one thing. It's going to be competing AI. So the more AI has influence, in my opinion, on these capital markets and on futures and Forex and stocks and options, more opportunity there's going to be, because you're going to have competing AI, and they're all not going to be good. They're all not going to be great. They're all not also going to be the same. You're not going to get one blanket answer to a question that you might get on ChatGPT. When it comes to trading, predicting something that's hard to predict, all kinds of things that are happening and that will happen that will affect your prediction, you're going to have AI come to different conclusions. I welcome it. I think there's going to be a higher probability to make predictions sitting back, knowing what to read, but going back to the concepts that matter with the tools that help, and everything else is bullshit. So I went on a little longer. I'm not specific on to any one highlight other than the best edge to have is information that's going to move us before most of the rest of the market. We're not going to have access to that. That's the uh, husband of the Speaker of the House. Unless you're the husband of the Speaker of the House, probably ain't going to have access to good legislative advantages to knowing what law is going to be passed or not passed like it should and didn't. We could do a webinar to explain the simplicity of how big of an advantage that is for, different moments within how a bill becomes a law. You never thought in eighth grade when you learned that the real value in understanding that is to know how you can make millions of dollars and not have to worry about getting an A on the test because you already not only have the answers to the test, the answers were already filled in for you. Anyhow, if you can't get that advantage of knowing information before most of the rest of the market, then it's about lead lag. Lead lag. Something goes up, then there's a moment or two that the market you're trading will go up. When that's tighter, trading becomes very effortless, but it allows you to be objective. There's a stock that helps. If there's a whatever it might be, that is path to get on and stay on and be around others in a community chasing the same feature, because that's where you're gonna get the most help. You're not gonna get the most help with the latest and greatest Fibonacci circle tool that's for sale. Hopefully I didn't go on too long, but I thought that it's something that you're always getting to scratch your head. The more you think about how you can help people, sometimes the more better ways you have to help people. And I think that you have to be thinking about it in order to get better at it.